Welcome to Seeking Alpha's Wall Street Lunch, our afternoon update on today's market action, news, and analysis. Good afternoon. Today is Thursday, November 14th, and I'm your host, Kim Kahn. Our top story so far. Walt Disney is rallying as investors applaud the guidance that accompanied fiscal Q4 results that beat on the top and bottom lines. Looking ahead, Disney sees high single-digit EPS growth in full year 2025 versus the implied guidance of up 4%. For 2026, it expects double-digit adjusted EPS growth. Goldman Sachs says 2026 guidance suggests EPS of about $6 versus consensus of $5.73. For 2025, Disney also expects approximately $15 billion in cash provided by operations, about $8 billion of capital expenditures, and is targeting dividend growth that tracks earnings. On the buyback front, Disney set a target of $3 billion for the fiscal year. For the most recent quarter, revenue growth of 6.3% year over year included gains across the experiences and entertainment segments, while the sports segment saw flat revenue growth. EPS for the last quarter landed at $1.14 versus $1.11 consensus and 82 cents a year ago. Free cash flow was up 18% to $4.03 billion. Notably, the entertainment segment operating income more than tripled year over year. In streaming, Disney Plus core subscribers were up 4% year over year to 122.7 million versus 119.9 million consensus. Disney Plus Hotstar subscribers were up 1% to 35.9 million versus 35.6 million consensus. And total Hulu subscribers edged up 2% to 52 million versus 51.9 million consensus. CEO Bob Iger said, "In Q4, we saw one of the best quarters in our history of our film studio. Improved profitability in our streaming businesses, a record-breaking 60 Emmy Awards for the company, the continued power of live sports, and the unveiling of an impressive collection of new projects coming to our experiences segment." Among other active stocks today, KeyBank Capital Markets cut Zeta Global to sector weight from overweight, saying short report arguments are gaining traction. Shares are very volatile after the company announced a $100 million stock buyback. Analyst Jackson Ader said, "This is certainly not where we thought we'd be just a few weeks after initiating with an overweight rating. We feel more than a little sheepish in doing so, but moving to sector weight is the right move for us. We believe that the growth story from expanding scaled customer spend on the extended platform, methodically adding sales capacity, and margin expansion remain key parts of the fundamental story. But with the short theses mounting and, as reflected in the share reaction, gaining traction, we do not anticipate the stock to trade on fundamentals until more clarity can be given," he said. General Mills entered into a definitive agreement to acquire Whitebridge Pet Brands' North American premium cat feeding and pet treating business from NXMH in a transaction valued at $1.45 billion. The acquired business includes the Tiki Pets and Cloudstar portfolio of brands, which collectively make up $24 billion in retail sales within the broader $52 billion U.S. pet food category. And ASML Holding reaffirmed its long-term targets, buoyed by strong demand for its products and services amid an expected growth in semiconductor end markets. The Dutch firm, which makes extreme ultraviolet lithography machines, expects annual revenue between 44 and 60 billion euros, with gross margin of 56 to 60% by 2030. That would imply sales growth of 8 to 14% on average over the coming 5 years. On the economic front, wholesale inflation came in line with expectations in October, picking up the pace from September. The producer price index rose 0.2% month-on-month, matching the consensus, and up from 0.1% in September, which was revised from flat. On an annual basis, headline PPI increased 2.4% versus 2.3% consensus and 1.9% prior, revised from 1.8%. Core PPI, ex-food and energy, rose 0.3% month-on-month, also in line with the consensus estimate, and up from 0.2% in September. Annual core PPI gained 3.1% versus 3% consensus and 2.9% prior, revised from 2.8%. Pantheon macroeconomist Samuel Toombs says, "The subdued headline PPI masks some large increases in components which feed directly into core PCE. PPI portfolio management prices leapt by 3.5%, driven by rapid stock price gains, while domestic air transportation prices leapt by 8.8%, the biggest October increase since records begin in 1990, he said. The decline in jet fuel prices since the summer suggests that the airline fares prices will drop back soon. Both these increases were larger than we anticipated, so we are revising up our forecast for the increase in the core PCE deflator to 0.3% from 0.26% in the wake of CPI figures. Core PCE inflation probably increased to 2.8% from 2.7% in September, making no further progress towards the 2% target since May. Moving from inflation to the other part of the Fed's dual mandate, initial jobless claims fell by 4,000 to 217,000, trailing the 224,000 expected. The 4-week moving average was 221,000, a decline of 6,250 from the earlier week's unrevised average of 227,250. In other news of note, billionaire Tilman Fertitta reported a 9.9% passive stake in Wynn Resorts. Fertitta, the owner of the Houston Rockets, reported owning 10.9 million shares of the casino operator. CNBC reports that while the stake is passive now, it's expected that it will turn into a 13D filing or activist position. Fertitta first reported a Wynn stake in the fall of 2022, purchasing a 6% stake. That prompted speculation at the time that the casino and restaurant mogul could make a bid for the whole company. And in the Wall Street Research Corner, B of A is out with its latest Global Fund Manager survey, and Long Magnificent 7 is still top of the list for most crowded trade. Half of the respondents in the November survey said buying the group, Nvidia, Apple, Microsoft, Alphabet, Amazon, Meta, and Tesla, is the most crowded, up from 43% in October. In addition, 28% of fund managers said they view long gold as a crowded trade, and 7% said they view long US dollar as crowded. Rounding out the top 5 in the list are shorting the 30-year U.S. Treasury and going long China stocks. That's all for today's Wall Street Lunch. Look for links for stories in the show notes section. Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB, and join the elite community of real investors to unearth great investing ideas. Just head to seekingalpha.com/subscriptions.